Is it Friday yet? Friday. It's the Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday as we had the single biggest down day since 1987. Some of you that are listening to this weren't even alive when that happened. Now, for everybody that was short, it was not as bad of a day. Matter of fact, it was could have been a very profitable day for you. But if you were on the long side, it was definitely a tough day to be a trader. So what we're going to do today is take a look at some potential breakouts and reversal trades as we identify opportunities in this market. So starting with the S&P, we're up 96 points this morning. 96 points, the market's rallying up as we're up about 3.5%. Now, I think I would not be surprised if we're up 5% today, and that still doesn't mean anything to me. Now, why it doesn't mean anything to me is because the market being up 5% after being down 10% still means that we are down overall. We got to remember the economics of how these numbers work, right? If we have a 10% move down followed by a 10% move up, we're still going to be down overall. So, if you think about it, there's the 10% move down, you go from 100 down to 90, and then a 10% move back up, you go from 90 up to 99, you're still down 1%. And that number just gets bigger as the numbers get larger. So, a 10% drop followed by a 5% rally is not going to get us back to where people are going to be comfortable buying into this market. And so I believe that at some point we're going to have a face-ripping rally and the markets are going to rocket up. And I'm here to tell you that I'll probably miss it. And the reason I'll probably miss it is because I need to be proven otherwise. Until proven otherwise, I'm a big believer that we're going to continue in a market movement where we have this kind of a pattern and shape. And this is really what we've seen. And when we think about it, this is what's called an impulsive move. Right? This is the impulsive move, which means it's powerful, it's relentless, it's going to continue to go through demand areas on a smaller time frame. This is a corrective move. Right? And our corrective moves that come back. Now, typically, here's what I've noticed on this drop. As we've seen this drop, these corrective moves have almost to a T come to a Fibonacci retracement percentage that we can measure ahead of time. As I'm looking at what the market has done on the way down. Like, for example, and I think I pointed it out earlier this week, after this little rally up here, was a 38.2 retracement of this prior move down, right? And so, we saw that shape kind of continued, and so when you look at how these shapes kind of continue, let me move this over. This was a move down and a rally back up. There was a retracement amount there. The one that I was just referring to was this move up here followed by this. This was about a 38.2 retracement. We're seeing the same thing right now. And so I believe that we're set for another impulsive move down. At some point, I'll be wrong. And at some point, the market will do this. I genuinely believe that. Now, it'll have to go through a lot of supply levels to do there. And I'm okay missing out on this kind of a move, knowing that I'm going to trade with the trend until it has told me otherwise. So hopefully that makes sense to everybody. That's really ultimately what I'm looking for. So yesterday we had our breakout trade down here. Now I will tell you I didn't look for the breakout primarily because we had the market was closed for a brief period as we had halted trading. And so I didn't get long on the gap down because then we halted trading again, and then we rallied back up. Now, the idea is that my assumption was that we would get some sort of an opportunity to get back in for a short somewhere up in this region. The problem was you didn't have any clean supply to tell you where that back in was going to be. So I know a lot of people got in short. If you did get in short right here, your stop still had to be above here, and that was a perfect setup for price to then take that additional move down. So what are we looking at for today? Well, I need to take a look. I'm going to remove these levels in here, as this was a target on our short. As we're rallying back up, and I take a look and I pull a Fibonacci retracement of this move down and where we are at the moment, and we're going to put in our fib retracements in black, we're sitting right now at the 38.2 retracement. No big surprise in here. So with that not being a big surprise on the retracement, what I would say is that for today, I'm going to look for a reason to get short somewhere if we break below this region here. I still will need the proper basing in order to get me that breakout. But until proven otherwise, I'm going to look for shorts. There's no clean supply up above me until I get to this hourly level up here. Now, this hourly level of supply is the supply that was created when President Trump came out and spoke 2 nights ago before making the travel ban and some of the economic things that he talked about. So if we do continue to rally up, then we may have a reversal somewhere up in this region here. So as far as a long, where am I looking to get long? Well, the answer is I'm not. I will say that going out to our much bigger picture, on our monthly time period, we're starting to look at these levels down in here for fresh monthly areas of demand where we could see a bit of a bounce, right? And so I do believe that there is a potential for a bounce at one of these areas at a monthly demand level that's not yet been tested. It actually shows up a bit better and a little bit cleaner in the Dow. And we hit that level yesterday. So this is the level that we hit yesterday. We talked about it yesterday in the daily market commentary. In the live trade room. We had a live trade room yesterday at Traders Army. We hit our monthly demand area and got a little bit of a bounce off of that zone. This level down here is the one that corresponds with the S&P level. So if we don't hold this monthly demand, then I think it's clear sailing down to 18.5 at the very least. All right, moving over to the Nasdaq. So in the Nasdaq, same picture applies. We came down to about where I thought we would after we stopped trading, halted trading. This was an hourly demand. Remember that every demand area that you see marked down below would have been a confirmation entry at best, and so was not around to catch this big rally up in the overnight sessions. If you're so inclined and you want to try to catch this next leg up, we are putting in a little bit of an ascending triangle. I will tell you, I'm a little bit cautious to do that. Because of the overall nature of our trend direction, and I'm okay missing out on that rally if the rally gets very strong. My level here is still around 8,000 if we do pop back up into this region. Crude oil. Now, crude oil yesterday, I anticipated a little bit of a breakdown out of this region. 1, 2, 3, 4, 5, 6 candles later, the market said no, you should stop, and basically said that you're out at break even if you took the breakout at all. It's really popped up and gained a little bit of momentum in the overnight hours. So as we continue to rally, there's some supply up above us. I think that crude oil is actually sitting on a cleaner area for a breakout, but then I've got some supply right up in here. We've really, from our original gap down, have traded sideways. So from our original gap down, we've really just been trading sideways in this market without much movement one way or the other. As it appears, we're kind of holding strong in that 30 to 33 range. The question is, how long does it stay down here? And so for now, I'm not going to add anything new to my charts. We have our little 15-minute zone up here where we may see a wick over wick reversal area. This level up in here is really, we've got some supply at this speed candle, but we've come back and retested that. And I think the next opportunity is for price to trade a bit higher from here. we could make it up to this region here. So there's a little day trade in there if you see that as an opportunity for a potential breakout. We do have also a little reversal level right down in here. Now, just keep in mind the fact, however, that our big picture trend is sideways, so our probability is going to be a bit lower. So any basing in front of this level negates it, and without quality basing here, it negates that level as well. In gold, we actually got a really nice move off of our little demand area yesterday as we hit here for a nice like 4-to-1 move out of that zone. Next potential area that we see is a bit lower. I've got to go to the 4-hour chart, and my 4-hour chart tells me that we've put in a big kind of double topping pattern here in gold on our 4-hour time period, definitely showing more weakness would be the overall picture. This was one of our targets. Let me remove this level. So looking at what I see in the overall picture, I think that if we base in front of here, I would look here for a potential breakdown. Now this breakdown here is on this wick over wick level there, and we can get a little bit of a move down from this region if we come into that zone. Looking at our bonds and currency markets, so bonds and currencies. So in our ZN level, we had this area of potential demand yesterday. We came back down and right at the open hit right through there, was unable to hold and actually started another leg down. We then came down to our confirmation long, and now this was a switch to a confirmation because we'd already come close to it once and just missed getting filled, and we've gotten a little rally out of that confirmation long. Now, the downside of this is that you've got a supply level right up here that could act as a turning point. So I would take your stop at this point. You've already moved at least 2-to-1. If you did take that thing, move your stop to break even, and then you are in a risk-free trade. And I would look up here for a potential price target. If you like this level for supply, then you got to go a bit higher for your stop loss. In the Aussie continues its move down. We have some supply levels up above us. Nothing I want to add for today. This is what I call a thorny level where I see a bunch of sideways price action and a lot of wicks in there. So I'm going to leave my supply level intact and really not add anything more to the Aussie. The Euro. So the Euro came down, and we got literally a touch and go off of our Euro demand. So the Euro demand got a very nice touch and go off of this zone from that level. That level's not dead, but I need to switch it to a confirmation entry because we touched it once, but we didn't trade halfway into it, so it's still okay to leave that level on the charts. So that one worked out for a really nice move off of the low of the day inside the Euro. Canadian dollar, we had set up a potential short, and this is frustrating. Of all the stuff that I took yesterday, I think the Canadian dollar was probably the most frustrating because we had a really nice rally up into what was a quality supply, and then it got just above my leg in candles high and popped through there to give us what was probably a stop out and then move the way I thought it went. Now, if your stop was up above this wick, then you're okay, and you got a nice move, and then it came rocketing back up. So now we're actually seeing some strength in the Canadian dollar in the overnights. When I move out to the 4-hour, still very much in a downtrend. So if you want to look at a candle-to-candle opportunity on the 4-hour in here, I think that's probably a pretty smart way to go. Last but not least, Great British Pound, Japanese yen. The Great British Pound is kind of still climbing up here in the last couple of days. I would look for a potential reversal off of this as we are, putting in that price pattern that I spoke of a bit earlier. Move down, rally back up, and we're sitting inside of that region where your next leg down would come back down into this range. So I'm just always looking at those fib retracements, and really I've been looking at the fib retracements more during this strong move down than really I ever have, and the reason for that is because I think there's a lot of computerized trading going on that's causing a lot of this movement, and that computerized trading is very effective. And so I'm going to remove this line in here because I feel like these demands are fairly weak based on the amount of basing that we're getting. We're getting a really big kind of descending triangle pattern look here. And so I'll need more basing to be willing to take that, but I think that one may be an area to look at for today, provided that I get some more basing in front of this level. All right, well, that's what I got. We will be back on Sunday evening, for those of you that are part of the live trade rooms. Go to see us on Sunday evening. We'll take a look and see what happens. Remember this, holding futures positions over the weekend is always going to take additional risk because of potential gap exposure. So make sure if you don't know how to protect yourself from that you learn. We actually have a free options on futures class at tradersarmy.com. You can go and watch. Maybe it'll help you to learn how to protect yourself over the weekend. So thanks so much, everybody. Hope you have a great trading day. I will talk to you soon. See ya.